Future Speak, we have a lot to talk about today. Actually, been some big moves in the markets in the last week, and we had some really good charts come in line last week with some big moves. The grain market spot on as we saw that bottom coming in the last couple of weeks. The euro currency, well, we looked for a move to the downside, and that, of course, did not last long. Moving down again right now, as all kinds of news coming out about Greece, but that looks like an important bottom. And the oil market's moving down as we expected. However, they're getting close to an important bottom also. So we have a lot to look at here today. I'm going to look at total of 6 segments of the futures markets, 23 different charts that we're going to look at, and great stuff. I think you're going to enjoy it. Remember, this is a special free version of FutureSpeak. This will be in the members section of the new Ask Slim site. If you haven't been there yet, go to AskSlim.com. There's a coming soon page there. You can sign up and you'll be able to be notified about when our launch comes. Right now, our launch date looks the week of July 20th, the first Ask Slim Market Week. That's a free show. Looks like it'll be on the 17th of July. Those are tentative dates. We're really working hard for those dates to be the dates. So make sure that you go and sign up at the site to be notified. All right, we're going to get right into the charts here. First thing we're going to look at, as we always do, is the energy segment. We'll look at foreign exchange, metals, treasury, stock indexes, and the grain markets. All right, take a look here at the chart in light crude. Get this to move into place, and there you go. Light crude chart, really lots of information on here. It's a good example of the different styles of charting tools that I use. On the bottom, all those arcs are cycle brackets, and what they do is help me see areas of lows on cycles. Cycles are measured from low to lows, and we'll have a workshop on that available for everybody too in the next couple of months. So it'll be a lot of great information on there also. Let's take a look here at this low that is pending right over here. We talked about a synchronicity of lows that brings downside risk when you get into that period, and that's how you make the bottoms. Now overall, this is a bullish pattern because, well, it held up for a long period of time and it's correcting in a minor way. That says when we get into the next rally phase, you will most likely get a pretty good rally coming up right in here. So that's what we're looking for. One maybe flush out here and then move to the plus side. We're getting it moving on the downside today. Let's take a look at the short-term pattern, and here you can see what we were looking for was a decline right into this period. Now this is getting a little bit longer, and we had a bullish reversal in here, so I'm surprised that it made a new low, but that isn't really meaningful, as this next day or so could make this important bottom. If it turns out to run past here in time, then we'll really know it's a flush out because it's extending this cycle on the downside, and I think we're getting very near a bottom. Now you could see these projections right in here, and we'll have this built into our charts for those of you that are going to become members in the charting service. You know, we're getting into this period of where it's likely to bottom. We're looking for bottoms in here as we get a washout to the downside, hopefully today or tomorrow, pretty soon, and then begin to move up. Go back to the weekly here, and you could see this note I have, synchronicity of lows brings downside risk. Well, the synchronicity of lows exists in the products that we're looking at also. So we're going to switch over here to RB, which is gasoline, and this has got a nice chart on it. You will see as it comes up here that we're in this period also of decline. And what I drew in for you is the how the cycle actually shaped versus the idealized cycle. So you could see when you get a higher low like that, it really sets up for some final decline right in here, and then moving to the plus side. So this moves along with oil a lot. Good synchronicity. Of correlations between oil and gasoline, and we're looking for gasoline to move to the plus side as we move into later in July and in August. There should be a bullish period in here, so that looks good. That coincides with the bottom that we're expecting in the oil market. Take a look here at heating oil /HO, and I have a watch list that shows you all the ETFs you could trade that are available in these individual futures. That watch list will be available on the resource page in the new Ask Slim site. So when you sign up there, that'll be available to everybody, member or non-member. Here is the low that we're looking for also in heating oil. And you can see that lines up just the same way as we have in oil. So all of these looking like they're getting ready to turn up. 2 cycles pushing up here. Now, if you look at periods where 2 cycles push up, when you get into bear markets like this and they can't get up at all, like right over here, 2 pushing up, and all you got was this crummy little rally here. Here you got, as it was topping, a little bit better rally there. Here you got nothing. I mean, you just couldn't see a rally in there, and that showed you how negative that was. And here you see you got a big upside spike. So this is a bottoming pattern, and that says to me that the next rally is very likely to be a sharp rally right in here, probably looking something like this one. So we're looking for a good gain to the upside here in all of these energies. We're going to switch now over to natural gas /NG, and you will see that coming up right over here. Natural gas. Let's get that up, and hope somebody answers that phone in my office in here pretty quickly. So here we are. You can see this big blue line over here. That lines up with a pretty important bottom in there, and you get this rally period, this green period. That's bringing very, very little rally in here so far, but you could see my note in there. There's a potential for a sharp rise over here as we get further along in this period. So we're looking for a potential pretty good uptick there in that market. Now I'm going to switch over here to the daily chart, and this pattern in here suggests that, well, there's still a little bit of time. So you can see the smaller cycle right in here. I've got those drawn in for you here. And it looks like, well, this probably has to complete some sideways or downside action before getting into this rising period. So we're going to look for some more choppy action in the natural gas market. And then after that, looking for some better upside. So that is a look at the energy markets. All right, so as we look here at foreign exchange, FX, we're going to look at the dollar and 5 other currencies. This has been very interesting week here in the foreign exchange market. I have made a point believing that the dollar is in a big declining phase and that it was likely to be getting a bounce and then roll over again and head down again. And that coinciding with that the euro would be likely to move to the downside. That's an inverse correlation. And that would set up another rally after that in the euro. Well, we had this news come out and keep coming out. I mean, Greece seems to be just a great place to be looking for news practically every minute. I had news coming out today that it was apparent that Tsipras was going to bring some new deal and that it was going to be better, and then Germany has rejected that, and now they're talking again about the referendum coming on Sunday in Greece, which essentially turns it over to the people to decide if they're going to accept, and Tsipras is out saying no, 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 no. And in the meantime, we have had the euro currency show pretty good strength in this period. If you thought the euro was going to fall apart based on Greece or based on the potential for a lot of other countries exiting the eurozone in a domino effect, well, think again about that, because this essentially looks like traders, investors are thinking that we'll get Greece out of the way one way or the other, and that's good news for the euro. And I've been saying that, thinking that the eurozone has, instituted a period of sensible governance. They want to call it austerity, but before it was nonsensible governance. That'll be in a future rant. And this period that they're in is about having debt to GDP deficits of less than 3% a year, and getting to a period where they could get some real growth. Yeah, there's a lot of weakness in the Eurozone setup, and they should have thought about 19 different governments in one currency and the difficulties with that earlier. But that's the world they're living in now. And in this particular world, I think that later on, the euro currency may be the strongest currency in the world. I've been saying that. I think that they're going through what they need to, the growing pains, and maybe Greece stepping out is part of that. And I think we're going to see a much stronger euro going forward. I'll show that in a big picture currency piece that I'll do sometime in the future. In the meantime, we'll switch over now and look at these currency charts. The first one we will look at in here is the dollar index. So that's /DX. Loading that chart up for you right now, and then we'll get this in place. Here we go. /DX. There is the short-term pattern, and that is that window of time. Now we're looking at the daily chart, and I was looking for a rally in here, and you could see I wanted to come to the daily first, so you could see this big engulfing pattern on the downside. Now this is a resistance area. It's testing today as the dollar moves back up, but we're going to get back into this period of weakness in here and roll over to the downside. I want to show you that on the weekly chart, and you'll see that here, that we're in this big red zone. That red zone was created because of a breakdown under this 23-week level. Doesn't matter that it got up above it, but you could see the downtrend that's established. I think any rally in here in this dollar is going to be false, and we're likely to see it moving over to the downside again. Now, of course, my thoughts are all based on what the highest probability analysis is. It's the the weight of the evidence. As I look at these particular cyclical charts, I look at shorter ones, longer ones, put all the information together, and the sum of the evidence helps me with getting a sense of trend direction. Another thing to look at in here, and I'm putting this in the weekly charts now, is this Hull moving average right here, which is continues to be in this downtrend. That says to me that this cycle right in here did this, and that's this pattern that I'm showing you right there. So that is a bad pattern for the dollar index. So now we're going to switch over to the euro currency /6E. Now the picture should be inverse for the euro currency because, well, it does move opposite. We were looking for a decline. We talked about that in the last couple of weeks, and that's this pattern right in here. Now we're about to get into here, and man, I'm telling you, we've got a weak euro right now, but in the next matter of days, I think that this is likely to turn up, and I think get above this level right over here. We're looking at probably over 115, maybe 117 in the euro. And here's that shorter term pattern. This is a great bullish bar that we see right over here. That's the opposite of that dollar bar I showed you on the daily. Here's this cycle turning to the plus side, and I have a feeling you could buy euro here in these next couple days and get a pop. Here's the resistance here. We'll call it in the high 115s to the high 117s. That's actually where I think this next rally is going to take the euro and take everybody by surprise, really, in that kind of movement. So that is the euro currency on the daily. Back to the weekly here. You can see this pattern. We're going to compare that now to the British pound pattern, which looked like it also was going to have a correction. Now that euro was trading right under that 34-week moving average. The British pound, much stronger, is trading significantly over those moving averages, 34 and 13 weeks right over here. Hull moving average here, you can see it is bullish. When you have a bullish Hull moving average, and this is part of what subscribers to the Ask Slim charts will be able to see, that this minor period of correction right in here is not likely to turn this Hull moving average down. And what's going to happen is it gives you a signal that you're likely to get another move on the upside right over here. So we're in maybe a week or two of correction still here for the British pound. After that, I think it is going to be in good shape moving to the upside. So that's /6B. The next one we're going to look at is the Japanese yen. This currency had rolled over pretty strongly. Now, there are two cycle rhythms that are operating in here that we call them out of phase. In other words, there isn't the normal nesting period. When they nested way back over here, you can see that you got a nice rally right in here. They've been fighting each other pretty much all through here, and when they nested right over here, well, you got that uptick right there. So now they're out of phase right in here. This bottom brought you that one. There's another bottom in here. It makes me wonder if we're not going to get another downtick in here in the Japanese yen, but after that is when you can get an uptick right in there. We're going to just say there's risk in the Japanese yen, looking at it just for a matter of a couple of weeks. Now, you can see the bear wedge that's formed in here, and when you look at this pattern right in here, that is a bearish engulfing, a bearish evening star with that doji right in this area. So that says there's some risk in here, and with this bear wedge moving to the upside, that kind of signals that we could get a move in the Japanese yen to the downside. Next thing we're going to look at here is the Aussie dollar. That's the Japanese yen. Take a look at the Aussie and the Canadian. These are very resource based, and we're still struggling to get a move here in gold and the metals. So they are really still struggling also. You could see the rising period right in here. For those of you wondering what those spikes are, that points to these important lows that you could see right over here. Man, was this a bearish pattern? 2 weeks up and all this time down. So you got a bigger bounce in here, but now you have, well, another 4 to 6 weeks of time just messing around in here. That does not speak well for the gold market. When you look at that, you wonder if what kind of an alignment that has with the gold market. So the Aussie still looking like it's got nowhere to go. And the Canadian dollar, very, very similar situation, failed at the 34-week moving average on the Aussie. The Canadian dollar, look at that, touch of the 34-week moving average and then rolling over again. So when you get this pattern in here, where you get a break and then you get a bear flag right there, and then you break down, that proves this pattern in here, the resistance here, and then the move to the downside. So the Canadian, that is looking very, very weak also. Let's switch over to the gold market, because we just talked about gold. I have been believing that gold was going to have a significant move to the upside in the second half of this year. This pattern in here has been absolutely locked. You will see here it's in this tight range. Now, again, there are a couple of overlapping patterns in here that don't give you a real solid nesting. And right now, you could see that there is potential for still more struggle in here, as there's a lot of conflicting movement in these two cyclical patterns, and that's what you're really getting here. This one moving up and this one rolling over, moving down. You're really stuck in there. You had the opposite here, this one moving down, this one moving up, and you're really in a place where gold is really, really stuck. I have this fear that it's still got some period of time out here to fool around, and that it may get one more drop to the downside before we get this big move that I'm looking for later. I want to move out on here as we look at this to a longer chart. Let's look at a 10-year weekly chart. And I'm not really doing a big picture analysis in here, but just showing you these cyclical patterns on these bigger ones. And we're in this period where we should have a rise. Now, as long as we don't get underneath this low in the 1130 area, we're still in good shape. But man, if it gets under 1130, that's going to be a free fall possibility. So we really want to watch that. 1141 is a support before that. So there's a bit of concern there when we look at that. And I don't want it to break down. Going to switch this over now to, I want to move this out to a 2-year a daily chart, so you can see these cyclical patterns as they shape up. It looks kind of messy until I get it blown up here, and look at that magnificent rhythm. And now where are we? Well, we should be getting a rally also, but you can see based on these patterns there is trouble here. Now I want you to see the dotted line. Why does this dotted line point down in here? What's the trouble? Well, here's what happened. this made a lower low right here. And that is concern. And then when it rolls over again and tests this low with all this time to go, this is a reason for concern. Now, I'm long gold stocks, and kind of longer term investments for me. But this is a reason for me to be concerned. Now, I don't have big positions, and I'm certainly not adding to my gold positions when I look at this. These patterns are not pretty. Resistance right now up at this, we'll call it 1182 to 1187. Right there, it's going to have a hard time getting through those numbers there. And the support number here at 1162, if it gets under there, I think it's going to test that 1141 support. So that is not a great picture when I look at that. I got to tell you, disappointed when I look at that. Take a look here at the silver market /SI. Again, we're going to be on a 10-year chart looking out at weeklies as this comes up. And I'm going to pull in just these last 2.5 big cycles right here. We're also in this period of rising. Silver is on a support right now that you can see the support is between 1525 and 1545. And it's gotten down to it this week. If it gets underneath this 1525 area, that will be a cause for concern also. And these markets are just looking sadly weak as we look at this. Now, hopefully this dollar weakness that I'm expecting is going to save these markets and get it to pull away from here and not have any kind of a breakdown. They're not beyond rescue, but there is a reason to be concerned when we look at that. I'm going to take a look here at this daily chart, and you can see right in here, look at this same thing happened. Now you see this double blue area? That is where we expected this cycle to bottom and then get a rally. Okay, we got that, right? And it even held above this low right over here, which said there's a potential for a good rally. But look at this 89-day moving average. It stops at cold, and then it breaks underneath this low, and there you go. Just like gold, this points to a couple of weeks of risk here on the downside. So how are they going to hold up based on these negative patterns I see here in the short term? I'm concerned about it, and I don't really see how they are going to hold up. But we'll see if a move down in the dollar can save them. Platinum's been negative anyway. It is at a period where I'm expecting an upturn in it, and that coincides also with what I'm seeing in copper. Here you have those cyclical lows nesting and some little sign that it's turning up in here, but not a whole lot. Not much for me to say to you about that platinum pattern as it has remained negative, and you can see it just has continued to track down in a pretty weak fashion. Here you'll see copper /HG. We're going to look here at these cyclical patterns. Now, this is a bullish pattern. This cycle right over here, that's how this one resolved itself. It's moving into this period here of rising. You can see right here where we pointed to, that is the potential period for bottoming. You have a bullish piercing pattern right there on the candlestick. That is a sign at those lows that we're expecting that it's going to move up. And here is the shorter term pattern. There is a bullish morning star right there that we have highlighted, and at the right time based on these shorter term patterns where it's turning up. So copper is looking to me like the best of all of these patterns. So we looked at these metals, and basically gold, silver look to me like there's risk here the next couple of weeks. And again, the only hope for them is a big break in the dollar, move up in the euro currency to be able to save them, and that would get you some moving away from these important areas of lows. But basically, those look like difficult patterns in there. The only one I like is copper, really, which I think is setting in a bottom. So we just looked at energy, foreign exchange, and the metals. Don't forget to go to AskSlim.com and sign up to be notified of our launch when that comes. And we have lots of stuff coming on, and you're going to see this segment and many other ones in the member section as once we go live. The last date of this of the free Future Speaks will be on the 15th of July. So we'll get 2 more of these out for everybody to see, and then it gets tucked into the member section after that. All right, so now we're going to move into the Treasury market. We're going to look at ZN/ZN to see the basic big patterns in here in the Treasury market. The Treasuries are in really terrible shape as far as the longer term picture goes. Here is the /ZN. Of course, if you're trading the ETFs in here, that would be that would be TLT, or the inversely correlated TBT. So this big cycle over here, that is the 11 to 12 month cycle. That goes back years and years and years, 15 of them or more, where there's a perfect alignment of them. This low that occurred right here, the fact that it rallied off of that low was perfect. You can see you had 3 cycles pushing up, giving you that rally right in here. Then what happened was that you got underneath this low. That breaks the whole thing down. It says this major yearly cycle is now facing downward. That's a horrible thing for the market. It means that every rally should fail. We got a rally, and that rally came based on this shorter term pattern right in here. You can see how that lines up. And before you know it, all 3 of these, we just said this one is moving down already. This and this will join it as we move into the August month, and there's going to be a ton of risk here in the bond market. That is a bad pattern right there, and we're going to be looking for much lower prices in bonds. Now we'll take a look at the short-term pattern in here. This is really cool because you can see the head and shoulders right here, left shoulder, head, and right shoulder. The right shoulder was a head and shoulders on its own that made the downside measurement. These lines show you the downside measurements. And now where are we? Well, let's take a look even at this closer pattern right here. And you can see I have a lot of lines in here. What those lines show you are a couple of things. First of all, this pattern right in here, that's this bigger one right here. Now I have the smaller one drawn in also, and you could see, look at how beautifully that traced. That's this one right here. And when it came to the short-term rally, well, this was the Greek news. Came right up and touched the resistance area right here and then failed. And now you could see rolling over again, and this is not a good pattern at all. So we have about a week and a half of downside risk right there. And that says, again, any uptick you get here in the bond market, well, that looks like it's going to be just, it's going to fail. I don't see how they can just keep rallying based on this pattern. So that is the 10-year. We're going to switch over here to the 30-year, and it's got almost the identical picture on the daily chart. So this is the ZB. Come on up right here, and it's even weaker than we showed because that couldn't get quite up to the resistance, and now it is rolling over again also. So I have the dotted line here is showing you this bigger pattern. This blue dotted line is showing you the smaller patterns, both of them rolling over, and that says this looks like a week and a half to 2 weeks. Where rallies come, they are not likely to be able to hold up. So that's a bad-looking pattern, and the bond market continues to look quite weak to me. And you can see right there that everything that we look at looks like the bond market is in a big bear market, and we're likely to see much lower prices, much higher yields as we go forward. All right, so now we're going to step over into the stock indexes. We're going to look at S&P cash. I do my analysis on the cash indexes because, well, the futures indexes, they trade at a big discount after the roll, and then the numbers get messed up. So I like to do my analysis on the SPX, NDX, RUT. We're also going to look at the VIX, which really has had a very significant move in right on time. And we're also going to take a look at the S-Slim MCI, Market Condition Indicator, which will be a bonus for those people that subscribe to 3 months at a time of the Slim charts. And we're going to send you the script for that also. So you'll, I think, find that to be pretty beneficial. All right, so now we're going to look at the S&P 500 SPX. when I talked about this market last week, I talked about the fact that the setup was such that it looked like there was going to be another rally to the upside, surpassing the highs by a little bit. They lined up to around 2157 or better on that move. That has really significantly changed by this downside move. So everybody says, well, this Greece thing, not that big of a deal. You know, it's a really tiny little country relative to all of Europe or all of the United States or all of the world. So if that's the case, why did the stock market fall 350 points? Why was there that big of a decline? And it has to be because there is much more out there that's causing the stock market to move than Greece. Greece is just a bunch of noise that's getting a lot of this whipsaw going back and forth. But this pattern that we're looking at here, it has changed. And I'm first one to say that I love the fact that I'm flexible and can look at markets that do change, and I think that has happened here in the S&P 500. So we're going to look at that. I have in the daily chart, I'll show you in a minute, I've got both scenarios there to show you. So on the weekly chart, we have broken through some support, and I'll show you that on the daily chart also. Here is the S&P 500 SPX, the big cyclical pattern that you see there that bottomed back in that last October. That is some revised timing for me when I looked at these bigger patterns, and I haven't done a big picture in a long time, and I will do that soon. That was an important low. It got you all of this rally in this period here. Now what we have happened is all of this thrashing for about 5-6 months where the market has gone basically nowhere. Now, I just want to look at these shorter term counts right in here. And you can see that 14-week low. And I mentioned that the NASDAQ was kind of unfinished when we looked at that last week and rolling over. Well, now the S&P 500 joined in that also. This lines up to weakness in this market for about the next 5 or 6 weeks. Now, that is revised from the way I saw it before, and just have to do what the shorter term patterns tell me, and this is a breakdown. Now you can see in here a left shoulder, a head, and a right shoulder. That is much clearer on the daily chart, which I'll show you right now. Big support in here comes into, let's say, 2022. When you look at that weekly chart. When I switch this over to the daily chart, and I tweeted this out this morning, here's what we looked at last week. The scenario was, as of last week, we were holding right in here and above support. That looked like we were going to get this last rally in here to the upside. But when this big downside move came, based on the day that Greece basically announced they're going to default and put in capital controls and only let you get 60 euros a day out of ATMs, that brought that big decline. That should not have happened unless there was major weakness, big pattern rolling over in here. So that changes the scenario. This was last week's scenario, but that breakdown puts this as the scenario. So we're in a rally right in here. Question is, can it hold? Will it test one more time? This is only 11 days. We've had 11 and 12-day bottoms in here, but also had some 14. So we could roll over and fall hard here in the next couple days and then bottom. Or that is the bottom. Any way you look at it, the rally only gets you into this resistance zone, and then you roll over again in this pattern. So that says to me there is a lot of potential weakness for us in this market here, and that is a changed scenario from last week to this week, and it's all about this ability to have this big downside break that really changes that scenario. So bad scenario now for the stock market. Was a good scenario up until that big down day, but that is now gone, and the probability of making a new high is now sharply reduced based on that. So there's that SPX pattern that we were looking at on the weekly. We're going to switch over to the NDX pattern on the weekly, and it lines up very, very similarly in these charts on the weekly, and there was what we showed last week, where that 9th week was incomplete. It was likely that it was going to roll over one more time, and that's what we're getting right in here. So this still has potential for another, we'll call it couple of weeks more on the downside. Look at the support here on that 34-week moving average. That's pretty significant. And another thing to look at here is that Hull moving average. You can see it's changed color right there. It did not change color in any of these small corrections for all of this period earlier in the year since this one right here. So you could see when it changed here, you got into a very, very choppy market that had a difficult time rallying. I'm wondering if that isn't what we're going to get right over here. So that is the first sign. So that looks like some weakness. I want you to see the Russell RUT, which has been the strongest of all of the indexes, and actually even this week, I would say it still remains one of the strongest of the indexes. We'll switch this over to RUT. Wait for this thing to update. And here you can see that important low came right there, and it got into these two cycles pushing to the upside. Now there's this big downside gap here and a very, very toppy look to it. So this actually has a correction out through August right there. We'll look for rallies to fail here in the Russell. It was the strongest. It remains the strongest, but this is also not a great pattern. Let's take a look at the Slim market condition indicator. I will move this into place so that you could see it, the MCI. This is very, very significant. Again, you can see the Russell. The Russell has not gotten down to the plus 25. That blue line, that's the swing zone. It's still green, but coming down here, kind of weak. Now look what the spiders did, SPY, that got down to the minus 25 and holding. That is a little bit stronger. We have the NASDAQ moving down sharply, and like I said, there's some more time likely in here. If it gets under the minus 25, that's a bad sign. And just the fact that it got into the swing zone is a warning, but if it moves back out of it, it's okay. If it moves through it on the downside, it's negative. And look what happened here on the Dow. That was the weakest. It's now turned into red here. It's at minus 89. That is a lot of weakness and a big warning that we are going to have potentially a lot more weakness out there, as these things are now giving signs that the internals of the market is weakening. The fact that you move 5 months sideways and then a break, couple of days down gets you a lot of these turning down very sharply, that's a negative sign, and it says that the internals were breaking down while the market was going nowhere. So there's the RUT. Again, we're going to move now over to the VIX, and you will see a very, very nice weekly pattern in here. Now I've got this blown out a lot. Let's just come in right over here, and I want you to see the spikes in here. Now here's the important nested bottom, big rally in the VIX. It rallied only for about 4 weeks there and then started to roll over. Here's the nested bottom right here, rolled up for 4 weeks. Now the secondary advances you can see right in here also. This one was 7 weeks off of that. Here is your nested low and the big move up, 6 weeks. And here where we are, nested low, we were looking for a big move to the upside in the VIX, and there's 6 weeks. So that says to you that, well, we've probably seen the spike in the VIX already. And now it come up and tested a number of times like it did over here. And I think that we're going to see that, a choppy market right in here, get some sort of a correction right in this zone, and then another spike on the upside in the VIX after that. That would come in August or September, where there would be a potential another big down move in the stock market and a big spike up in the VIX. So the VIX acted in a way that we expected, and that smaller pattern right in here, you can see, well, look at that bottom and then moving up this huge spike. And now I think we're going to get some chop right in this area right here. This was the breakout level. You could see it's made it today right in here through this period out into mid to late July. So we're going to see a lot of chop in here, and I think we're going to see big moves in the stock market, chopping back and forth also based on what we see here. Big wide range here between support and resistance in the VIX. So that's a look at the stock market and all the pieces that go in there, and we're looking at a period where I think we're going to be chopping around a lot in here, and then probably get another leg to the downside after that. A lot of weakness, and that did change by that big down day coming. And that big down day carries a big message, and I'm not afraid to change when I see something that does look like it needs changing. So we're going to switch now over to the grains as we wrap up here, just the last 4 charts that we're going to look at. We talked about the last couple of weeks that the grains looked like they were putting in an important bottom, and we were likely to see some upside move. Truth is that there's no way that I could tell that the upside move was going to be anywhere near as dramatic as we saw happen in these charts. Just absolutely fabulous upside moves as we saw these bottoms come in. Now they're getting big pullbacks today after those big upside spikes. That is what you would expect in these grain markets. Take a look at these phenomenal moves in here. Here is where we expected the low to come. Those blue timing spikes there said that is the timing for the important low. Man, did that come right on time. Look at this upside move in the corn market. We'll switch this over to the daily chart. Let me go back to just 6 months in here, 6-month day. And look at that, absolute breaks out over these moving averages. The slim ribbon turns positive, and this thing absolutely has this huge explosion to the upside. Take a look at the wheat market /ZW, and that gave you a very, very similar type look in here as it was bottoming on time, and this huge upside spike also. Pulling back again, as I said today, but this was a perfectly timed bottom that came in these markets. Here's the soybean market moving up sharply in that green zone, and the oats market, well, they did something very, very similar, /ZO, as all of these grain markets took off. There was where the low was due, and big upside move there in the grain market. So that was a very, very interesting future speak, as there was great charts to look at there, and I think really valuable information. Don't forget, go to AskSlim.com and sign up on the Coming Soon page. If you have any questions about what you saw, write me to at slim at AskSlim.com. Really looking forward to bringing you all of our great information going forward. And that's it for this Future Speak. See you soon.